What's the backstory from Bezos and Amazon?
Well, I met him years ago at a Kleiner Perkins retreat. We were both sort of young CEOs. He really came out of a company started by another friend of mine, Dave Shaw, D.E. Shaw and Company. And if you think about Amazon not as an online store, but begin to think of it as a trading operation similar to D.E. Shaw, what Jeff understood was that information is king, even in the retailing business. And that's underlying what he did to build.
Will he and his robots destroy American retail?
No, interestingly enough, that's not really going to be the case. Online retailing today is only about, I think it's at 7% of overall retailing, and it's growing fairly rapidly at 15%. But if you actually look at how that's going to track out to the future, you happen to have picked an example where I don't think there's going to be that big an impact. I think it'll probably stabilize at about 25% online retailing versus storefront retailing. There's still a lot of value to going down to that store and feeling that Gucci bag.
And Jerry, also behind those algorithms, there's a huge, tremendous human effort within Amazon picking stock from shelves, putting it in a box, and getting it to you. Are those jobs going to go as well?
Absolutely. The future's very bright if you can afford it. And the problem is most people are not going to be able to afford it. What we're seeing is an acceleration in automation, driven primarily by advances in artificial intelligence. And over the next decade or two, we're going to see a number of different, lots of areas of employment just be devastated.
The argument has always been, since Das Kapital was written, that you get new innovation, it displaces some people, but ultimately creates better jobs. Why is that not true now? That will be true. But the future, as they say, we're all dead in the long run. The question is what's going to happen over the next 30 or 40 years while we go through a transition. Eventually, the people who are out of work may starve and die, and then everything's going to be great. But maybe that's not such a good thing in terms of our social policies in the short run.
So you're saying it's a one-time transition, and then in the future we'll see other different kinds of jobs crop up?
The labor market is constantly evolving. And so it's sort of like global warming in the sense. What matters is not that it's changing. That's a good thing, because that generates additional wealth. What matters is how fast it happens. If it happens so quickly that people can't adapt, as with global warming, that's a problem.
And we have Jerry Kaplan with us and Michael Dart of MKM Advisors. Israel, Michael, this goes to a bipolar economy, a two Americas economy. When you work day-to-day in economics, is it one America, or is it Jerry Kaplan's two Americas of successful digital labor and people left behind? Which is it?
Well, you in a trading environment on Wall Street, you can see rapid innovation, displacing and disrupting a lot of the jobs, or at least the way that the traders would do their jobs. So I see that firsthand. I'd like to ask Jerry, though, what would be your one or two best policy prescriptions for how to potentially bridge that gap if you have this period of disruptive innovation?
Okay, it's a very good question. I think the problem with us looking at this problem of income inequality today, which is essentially what we're talking about, is that we're looking at it statically. We're not looking at it dynamically. So people are thinking we have to take away from the rich and we have to give to the poor. That's a non-starter in the current political environment. But if you think of it dynamically, the U.S. economy doubles approximately every 40 years. And this has happened reliably for over 200 years. So think about what that means. 40 years from now, there's going to be twice as much wealth out there as there is today. So the real question is...
If that continues to be the case, I mean, we saw Moore's Law have to change recently because things are changing in technology.
Well, that's true. I think it's a reasonable assumption that the economy is going to continue to grow at the rates that it has in the past. So the issue is, how do you redistribute the new wealth? How do we put the right policies in place? And the answer is to set up an economic system that no longer favors the currently rich, but that permits other people to join that up.
How do you do that?
Well, I'll give you an example. I have a number of ideas in the book. One of them is to take the corporate tax and make it progressive so that companies whose equity is much more widely distributed pay a lower tax rate. That's going to give them an advantage in the marketplace, and therefore companies who benefit the largest group of people will win.
I hear that and I say that sounds like a really good idea, and I can also hear a tax lawyer just licking his chops in anticipation of digging into that. I want to ask a broader question. If you look at the invention of movable type, right, there's this broad sweep of history. We had the Reformation, the 30 Years' War, and then the Enlightenment. Where are we on that scale with AI?
Well, this is a fundamental change. It's going to sound a little extreme, but this is a little bit more like the invention of the wheel. We're talking
Wow.
about a fundamental, or like the steam engine. Maybe that's
Okay.
a little better. The point is it can be used so broadly across so many both manual and intellectual and knowledge worker type operations. It's going to transform labor. That's not to say there won't be new jobs, but the jobs and the skills that are necessary for those jobs are not the same.